We begin with Kayla Tausche in Washington and the trade war latest. Hey, Kayla.
Hey, Morgan. The U.S. and China are punching and counterpunching this morning. The U.S. raising tariffs on a third of Chinese goods and beginning a process to levy the remaining $300 billion that the U.S. imports from China. In response, China says it will put tariffs on $60 billion in U.S. goods in about 3 weeks' time. That list largely comprised of American crops like peanuts and beef, targeting farmers, a constituency where President Trump has been trying to limit, not exacerbate, the fallout here. But China may be sharpening other tools, too. State paper The Global Times says it could stop purchasing farm and energy products, cut back on orders of Boeing planes, and possibly dump treasuries. The U.S. Treasury Department plans to auction $237 billion in debt this week. China is its biggest customer. Treasury did not respond to a request for comment before airtime. We will let you know when we learn anything there. But Boeing, for its part, is unbowed. A spokesperson telling CNBC, quote, "We're confident the U.S. and China will continue trade discussions and come to an agreement that both benefits U.S. and Chinese manufacturers and consumers." It is notable that the targets of Chinese retaliation are the exact industries and companies that would have received specific benefits as part of any deal getting done. This escalation coming as plans for a next round in Beijing remain unconfirmed. Guys?
Kayla, what really stood out to me is those list of tariffs and the fact that they were so focused on agricultural products coming from the U.S. into China. Beyond that, I know you just laid out some of the other potential levers that could be used by the Chinese to retaliate. But beyond that, what else should investors be looking for if this does continue to heat up and ratchet, especially if we get $300 billion worth of tariffs that we implement as well?
Well, I think that investors should be focused on this June 1st date. It's notable that China, in its retaliatory list, didn't say these are going to start tomorrow. They said these tariffs on $60 billion in U.S. goods would begin June 1st. That is the date where it's expected that any goods that were shipped from China to the U.S. after May 10th that are subject to those higher tariffs here would reach U.S. shores. So it's become very clear that June 1st is now being treated as this new soft deadline. And I think notable that China is not putting these in place immediately and signaling that there could be a few weeks for this to continue behind the scenes.
And that's a similar dynamic with the tariffs that the U.S. announced as well, right, Kayla? Those that had that were not are already in transit were not subject to the tariffs. You had to have left port.
Correct. So it was the goods that had left mainland China after midnight on Thursday, midnight Friday morning, and those were not expected to get to the U.S. for roughly 21 days. So that's why 3 weeks from then is being looked at as this new deadline. Although if things keep escalating, it's hard to see how the Treasury Secretary and the trade representative would find it politically palatable to go to Beijing and continue these talks. But perhaps that's what Beijing's officials did last week when the vice premier said, "I come here under pressure."